Marhaba and welcome to Tajarib. Today we talk to Ben Harburg, Managing Director of MSA Capital, one of the largest funds operating in China, India, Singapore, Africa and the Middle East. We'll start with Ben, his personal background. One of his first jobs was establishing BCG's office in Dubai, their first office in the Middle East, the experience he got from that, how he moved to commodities trading in Asia and how that got him to interact with the Chinese market and eventually today lead one of its biggest venture capital funds. We'll talk about the fund's structure, its mandate, its most important investments, how they came to be, and also their view of Iraq specifically and the region as a whole. When it comes to tech in this region specifically, Ben has this big idea about leaping rungs on the technological progress ladder. For example, going from cash directly to e-wallets without passing through the credit cards option. Going from no tech at all to mobile instead of passing by PCs or laptops. And many other examples we were able to bring up within the conversation. We also talk about protectionism in the region, how whether it's important for governments to regulate which entrants can enter their markets, how they can do that, and how they effectively have or haven't done that, and why, specifically when it comes to Iraq and how its government should deal with this. Speaking of Iraq, MSA was a participant in the single biggest tech investment in the country with Belly, the taxi, ride-hailing and food delivery super app, at $10.5 million. We talk about this, how this investment came to be, what factors were considered as the decision was being formulated, and what this reflects on Belly, the business, as well as Iraq, the market, what they're eyeing as well in terms of their next investments in the country. We tipped our toes into discussions such as China's role as a growing economic superpower, Thucydides' traps and how the relationship is managed right now between them and the US, as well as other countries. And we also delved into the Saudi versus UAE debate as to which of those two countries will be the tech hub and possibly financial hub of the Middle East. We also brought up Qadis FC, the football club he co-owns, what he's doing there and its fan base in Iraq and the Middle East. Obviously, with many of these insights, Ben's experience investing in China is of tremendous importance. So I'm very glad to have had him. Number one, because he's a foreign VC who has his own unique opinion formulated about investing in Iraq and the Middle East, as well as him being from a very interesting place like China, whose technological progress and path is of immense inspiration to many of the founders here in Iraq. Before we proceed, I'd like to thank our partners at Key, a leading Iraqi financial technology company, as well as our sponsors at Capita, a company focused on private sector development through research, investments, and advocacy. Now, I'll leave you with this episode and I hope you enjoy. Hi, Ben.
Hey, how's it going?
It's going great. What about you?
Doing very well. I'm very well. Thanks for having me.
No, thank you for being with us, on with us. And it's an absolute pleasure to have you, an absolute privilege. You're calling us from Abu Dhabi right now. How hot is it?
It's about 100 degrees Fahrenheit. So I don't know
Okay,
what
what is that like? I think
35, 40
45.
degrees Celsius.
Yeah, no, we're nearing the late 40s. No, I think we have you guys beat,
Okay.
to be honest. But
Okay, you should.
yeah, right. But okay, and you have you been to Iraq before?
Suleimania, so northern Iraq.
Okay, I see. Why not Baghdad? Have you been to Baghdad?
No excuses. I would love to go. I've just not been able to go. Well, one of our colleagues from MSA has gone. So Walid Faza, who's another partner with me and is also involved in investments in Iraq, has been to Baghdad.
Right. Okay, I see. Honestly, that's such a candid answer. Like some of our guests just like make up things like this is why I'm not in Baghdad, but I really appreciate like the candidness of just saying yeah. Maybe whenever you're there, do let us know, please. So, Ben, you're an American investor who has co-founded and is running a $2 billion fund investing in the Middle East, in Pakistan, India, Southeast Asia, Africa. But I think what you're most known for is China. So I don't know if it's the inner workings of the Illuminati, because it seems like so, but your dad was a US Air Force pilot who actually flew Kissinger to China during one of his visits in the 70s. And you have actually shared the stage once with him on his 50th anniversary of his visit. So it kind of makes me question, because everything seems to have been drawn out properly. Like, you had the motivation from childhood, you went to Tufts, then afterwards to university in Berlin. It kind of makes me wonder, like, why did you not become a diplomat, or even like a pilot for that matter? Why VC?
It's a great question. That was always the plan. And I studied international relations, and most of my internships during college were at the State Department, at NATO. I worked at the War Crimes Tribunal in The Hague, which is a UN body. So that was really the objective. But just at my senior year of college, someone kind of grabbed me by the side and said, probably the best path to the politics is actually business first. And if you can kind of learn marketable skills in business and know how to run a business and a balance sheet and raise money and do all the kind of key commercial components of a business, that actually prepares you in many ways better for politics, which is maybe an indictment of politics. But it's also, the view was that you could always bounce back and forth from business to politics, but it's much harder to go from politics to business. Just because maybe you have less of a marketable skill set. And so I kind of took that advice to heart. And so rather than, pursuing the Foreign Service or one of those kind of traditional entry-level jobs out of university, maybe at a think tank, I instead got a job with BCG in the Middle East. And so I was one of the founding members of the BCG office in the UAE back in 2007.
Right. Okay, that's remarkable. So is it a Mitt Romney in the making?
There are a few different case studies. It's a great one. I mean, unfortunately, many of them are on the Republican or conservative side, I guess is fair to say. Not as many Democratic examples, examples. But yeah, I think the objective would be very much like a Mitt Romney, to kind of bounce back and forth between the two.
Right, I see. And so you were one of the founding members of the BCG offices in the Middle East. How was that period? What did you learn from then? And what year was this?
So 2007, it was a very unique period and a special period, I think, in Middle Eastern history. So obviously pre-Arab Spring, it was a lot easier to travel around. We went to places like Syria on the weekends. I actually had a case at that time in Iraq. We did a project for one of the largest banks in Iraq at the time.
Which one?
I didn't travel to Iraq at the time, but the bank was being run virtually out of Amman, Jordan. It's a bank of Baghdad.
Oh, okay.
And so it was, but I think, and obviously this was the time when literally the Burj Khalifa was being built in Dubai. It was a very unique kind of period of extreme growth and a lot of energy in the region. And frankly, there was a bit of a trough, actually, obviously in 2009 and after the GFC, but we're seeing similar energy today as we were in that period.
Right. And how did that take you to China? So I would imagine you staying there in the Middle East and working in the offices as the business expands. 2007 is not late days, it's pretty early days, we can say, like for the Middle East as a whole, and especially the tech ecosystem within. So why?
Sure. No, and I did get involved in tech even then. We started what was one of the first Muslim matrimonial websites, largely centered on Egypt at the time, and it still exists today. BuzzArab.com, if you want to use it.
Okay.
And it's still profitable. But no, I think I got the entrepreneurial bug, and I think the traditional path for a consultant at that time was you go to business school and kind of spend a few more years in consulting. And I wasn't made out for consulting. I'm a bit more of a maverick, which is probably why I ended up back in Iraq. It takes a certain profile, I guess, of Western investor to come back. And so I actually left BCG to become a commodities trader and to start a mining company. Maybe akin today if you were, or let's say circa 2021, if you were to leave your consulting job to start a company in the crypto space when it was really booming. I left BCG to start a mining company in Indonesia, and given just the upward trajectory in the commodities ecosystem at the time, I was actually able to raise capital, and ultimately we were essentially acqui-hired as a business. And so that kind of took me out to Asia. And at that point I was in Singapore, and I was then kind of tasked with running this newly merged global commodities trading, mining, logistics entity. And then our largest receiver market was China at that time. And so starting really 2009, 2010, I was commuting out back and forth to China and ultimately set up 4 offices in China and was spending a lot of my time there. And around 2014, 2015, started kind of seeing where the wind was blowing with regard to China tech. And so sold out of everything I had in the mining business and the commodities trading business and put that all into China tech investing.
Right. Okay. And so I don't hear a lot about your work on the like when we did our research, we didn't find a lot about the Indonesia thing, about the energy firm as well. So why so secretive about it?
Commodities trading as an industry is just a relatively quiet business. I mean, many of the largest traders in the world, if you've probably heard maybe of a name like Glencore, they don't even have websites or didn't have websites until they went public. And so it's a business that kind of thrives on opacity and to some degree confidentiality and secrecy. So it's just a space that's kind of this invisible layer that exists within the kind of global trade ecosystem. So all of the things that we use in the hardware space and technology, mobile phones, electric vehicle batteries, they all have at one point touched a commodity trader, as the oil that goes in your car and the electricity, usually in most instances, that powers your home, came out of, in most instances, a coal-fired power plant, whose coal was delivered by a commodity trader. So it's a quieter business. So during that time, I did almost no media or interviews, and very few people do in the space. And so it's only now that we're kind of in the technology and venture ecosystem that we have the ability to talk more about what we do every day, and it's a bit more transparent business.
Right. So you went into China and you started meeting founders, entrepreneurs of tech ventures. So yeah, why tech specifically? What got you intrigued in tech? You had come from a commodities like background, something very far away and removed from that. So why?
Well, I started investing in tech in 2013, 2014 with my own money, so kind of seed investing. And you see people that are coming from different industries kind of toe dipping their way into tech via angel investments. And so that was my path as well. So I started using my own capital to invest and realized that I had a pretty good eye for understanding a business, adding value to a company post-investment, thinking about kind of effectively what was coming next, what would be the next geographies, the next business models. And so that kind of got me into it. And then, as I said, I was in China every couple weeks doing the more traditional commodity side of the business, and was witnessing the rise of these companies that at the time no one had ever heard of. Like, WeChat was owned by a company called Tencent. At the time, they were actually more heavily favoring a messaging application called QQ, which was also a Tencent property. But Tencent was this cute little name that that no one really knew what they did, and you were just kind of witnessing the growth of these behemoths. And it wasn't really until kind of 2015, 2016 that they really, I think, came on the global radar, to a wide degree. But to me at the time, being in China and spending time there, just felt like a secular trend in the growth of Chinese technology, and I felt like it was something that you had to invest in and had to be a part of. And so I threw everything I had from a personal resource perspective into it thereafter.
Right, but how did you find these companies? How did you find Tencent? We're talking about 2013 China, where who would have heard of Tencent at the time? So what got you to these people?
Well, I wasn't a Tencent investor. I wish I was. Some farm boys from South Africa called Naspers beat us to it and made one of the greatest investments in modern history. But I was experiencing these companies because I was using them. I mean, if you wanted to communicate with your clients in China at the time in the commodity space, you had to download WeChat, and you had to order your food off of one of the food delivery apps. And, so it was kind of being pushed into our daily existence by force. And but as I experienced it and utilized it, I mean, you saw kind of just the absolute tear on which it was growing. And so when I got into VC on the China side, I partnered with other great domestic investors. And we ended up building this firm together. It's not something I could have done on my own, certainly.
Right. Okay. So back to Kissinger. We've actually recently seen him meet Xi Jinping, I think last month in China, where the latter described him as an old friend and said he had great respect for their relationship. And now China may not be as old of a friend to the US. I don't think it's been over 100 years since diplomatic relations were established, but it sure has great respect for it. And I don't think many of us could deny the role of the US in China's becoming a great economic power. Now, where do you think this relationship is heading? Do you think it's going, let's say, Thucydides' showdown, or could the story take an unexpected turn and result in a sitcom-style compromise?
So I'd say, there's probably a 90-10 scenario. The 10% is some outlier where we have a really powerful president in the United States who has a significant amount of political capital and public support, and they're able to do some kind of a deal with China, not unlike the ones that the Trump administration were trying to do during their time around IP protection, around trade imbalances, around kind of some of the guardrails around protecting American business from Chinese encroachment. And that if that deal were to be done, then they could kind of declare victory and come back to the American populace and say that now, relations have normalized. I think that's kind of the best case scenario, but it's highly unlikely. What's much more likely is that we just achieve some kind of a stasis, where hopefully there's stability and predictability in the relationship, but we are now very much great power competitors when it comes to politics, economics, and military affairs. And as you know, you mentioned Thucydides. This is a concept where a rising power, when it bumps up against the incumbent power, there's always going to be conflict, and that incumbent power is always going to try to push back on that rising power. America was very happy with China being a country that manufactured low quality goods and low-cost goods, but when now an American company competes against a Chinese company to build a gene sequencing machine or 5G infrastructure, that's a very different competitor. And certainly, if you're the incumbent, you don't like that. And so that means there's very little that China could do, because China is not going to stop its own rise. It's not going to slow its expansion into these areas where it bumps up against American economic or political interests, and that means that conflict, either on a kind of Cold War scale or otherwise, is inevitable. And so I don't see much improving other than stability and predictability in the relationship over the coming decades.
Right. So what do you mean other than stability and predictability? Is stability basically a Cold War scenario, or?
It's some kind of a stasis. I mean, there certainly need to be kind of guardrails established around the relationship, red lines that enable, both sides to communicate, diffuse, potentially dangerous situations, and avoid a hot war, which is obviously the thing that all of us are the most concerned about. And so that means, that if two planes from America and China were to collide, or ships were to cross each other over in the South China Sea, that we would have a way for resolving that without going to full-scale conflict. Beyond that, though, what I mean is also economic kind of guardrails and a clear understanding of at least the two countries competing on an equal playing field globally. And some feeling that one is not gaining at the advantage of the other, either by IP encroachment or some other kind of domestic favoritism of domestic suppliers or some other kind of non kind of capitalist trade practices.
Right. And do you think either side is motivated to instill guardrails and limits and hard nose? And has this ever happened before? Has there been a transition from great power to great power with basically minimal conflict?
We were able to avoid conflict, obviously, with the Soviets during World War II, post World War II. I think this is a very different type of dynamic. I think the Chinese are a far more different power than the Soviets were, and a far more formidable competitor when it comes, to particularly economics and technology. And that means that the stakes are in some ways higher, and there are fewer kind of easy answers in how the two countries collaborate. But I do think that, we have in place people on both sides of the equation and both sides of the Pacific that are very much invested in not letting this get out of hand and ensuring that it's a stable, predictable relationship. And so our hope is that we continue to see support from both sides. And I sit on organizations, you mentioned Kissinger, I sit on boards with Henry that are specifically designed to help provide for room for track two engagement and other forms of kind of dialogue outside of the limelight to ideally and continue to avoid any kind of threat of hot war.
Right. And yeah, so you do think that in the end, there will be predictability, as you said, status, and there will be stability at the very least that wouldn't harm, especially, let's say, foreign investors entering into China and pouring money there. But are you confident in the fact that there will be no harm, is my question. Yes, the Biden administration has done some very, let's say, minimal trade bans, regulations on things like AI, semiconductors, etc. But will we see that expand from the US side or from the Chinese side for security, geopolitical risks? Are you factoring that in?
Generally, China is very much open for business today and actively courting global foreign direct investment. They need it. The economy has stalled. The post-COVID recovery that was expected has not come. We didn't expect it to come, but the world certainly did at any kind of pace that people expected. And so China is very much open for business. I think generally global investors are protected in China. I think there are a lot of narratives that are incorrect around the risks associated with doing business in China. Particularly, again, if you're investing into Chinese businesses, there's certainly been domestic favoritism of businesses. But if you're investing into a local business like a Tencent or an Alibaba, they will be favored over a global competitor. But you will still benefit if you're financially invested in them. There have been some bumps in the road from a regulatory perspective and let's say unpredictable actions taken that global investors maybe didn't see coming, that again, those of us that were on the ground did with regard to regulation around those businesses. But that again affects domestic investors as much as it does foreign investors. So it's not about favoriting one or the other. I think where you're going to expect to see more action from a negative perspective is kind of increased and expanded capital controls, sanctions regimes, and kind of added names to entities lists on the US side, aiming to restrict capital flows, technology, software, hardware flows into Chinese businesses. I think that again, that's in the name of promoting and protecting incumbent interests and those kind of initial IP holders, largely that originated from North America. And so I think you can expect more of that and an expanding scope.
Right, and you guys have that factored in, priced into what you're doing, I'm assuming.
We've certainly done our best to ensure, and I think we're one of the few firms in China that have a deep understanding and relationship with Washington, as well as understanding of where things are going in Beijing and on the ground in China. And so what we have done as a firm and what we are committed to doing is ensuring that we are investing in China into industries, into companies that aren't harming American interests, that aren't harming the growth of American businesses. They're certainly not supporting military apparatus or other components within China that would conflict with America or would threaten American interests or values. And I think that there's a very easy path to that. There's a huge amount of businesses in China that feed on domestic demand, on consumer demand in China, that are not controversial and that benefit from the 1.4 billion consumers that exist in China, but without compromising American values. And in doing so and in investing in that group, we were able to enable our investors to access this kind of significant alpha of what soon will be the world's largest market without compromising US values.
Right. Now, speaking of the domestic, there's this general view in tech that Chinese tech companies are merely copycats and importers of innovations from US companies. And these US companies are the ones who take things from 0 to 1, as they say. But do you think there have been Chinese innovations that are now being exported to the US and to the world in general?
Yeah, this pendulum is rapidly shifting. So, I mean, if you go back centuries ago, China was really the innovator, and it was the West that were replicating or building upon some of the core discoveries from China and kind of core innovations from China. That pendulum kind of swung back towards the West over the last couple decades, certainly as America had a significant head start on China with regard to government support of technology, innovation coming out of the universities, the existence of venture capital firms and people that were really willing to take bets on nascent technologies. I mean, U.S. as a country has a 40, 50-year head start on venture capital over China. That pendulum is now swinging back towards China, and I think you'd know that even from your kind of personal day-to-day consumption experience, that there are innovations or models coming out of China that are actually now setting the benchmark, and it's actually American companies that are replicating them. That's both business models as well as kind of pure play branded technologies. So I think that TikTok is indisputably the global winner when it comes to short form video. And companies in the e-commerce space like Shein or Temu now are dominating their Western competitors when it comes to fast fashion, and they're in many ways putting kind of the kind of traditional, particularly offline fast fashion companies really against the ropes. And we're seeing that across essentially anything that is mobile first. So mobile first fintech, mobile first gaming and entertainment and social, mobile first commerce, that really it's China that has in many ways been the innovator. And it's the West and other markets that are replicating Chinese designs. I mean, most American companies today would very much like to, most companies in the fintech space would very much like to replicate what someone like Ant Financial have under their hood. Or again,
which is the owner of
TikTok has been able.
Alibaba and
Ant Financial owned by Alibaba.
Okay, yes. Right. So yeah, I agree, and I think like what ByteDance did with TikTok, because we notice it in our daily lives. TikTok in Iraq, I think, very high consumption from everyone basically, as well as like Tencent, what it did with PUBG, which is probably the most popular video game in Iraq right now. They're both examples of China creating great products that, on their merit, have spread to the rest of the world like wildfire, practically. And there's this topic which we debate frequently on the podcast about the like differing approaches of countries between countries like India, which you also invest in, and ones like China, where on one hand a country leaves its market open like to foreign entrants, doesn't have a lot of, let's say, domestic favoritism, but ultimately a tech industry, a local one, that is busy competing on a domestic level, and can only dream of expanding beyond. Whereas in China, maybe the scene is a bit different because there is an incumbent in every sector, and that incumbent does have the advantage of being able to think more clearly, think bigger, and think of how they can expand. And now, how do you see this playing out? And what do you think is the right approach here? Of course, we can't just sit here and talk about what the right approach is, but let's take the Middle East as an example, okay? What would you think the right approach for the Middle East is, and why? Is it more protectionist, or is it open market to everyone?
So I mean, it already is an open market, so it's hard to kind of rewrite history. And it's
Is it though?
a battleground market where, well, it's an open market from kind of these large platform perspective, right? So the likes of TikTok are competing with Instagram and Facebook in a way that they aren't competing with each other in China, right? And they're not necessarily competing in India either, because as you mentioned, India has now kind of gone the protectionist route, and most of those Chinese apps have been removed from the Indian App Store. And so in that regard, the Middle East is still very much a neutral ground where multiple businesses can compete. But to your question, there are a lot of industries, and this is where we obviously seek to invest in the Middle East, that require a deeply localized form of products and services, right?
So what's that like?
I think it would be very. So I mean, one of the first tests we put in front of any business that we're looking at in the Middle East is, could this service or product easily be done by a global competitor? Is there some kind of high degree of localization required? And if it can't pass that check, then we're not going to invest in the business, because it means that one of these Chinese global players or American global players or maybe a European player in some rare instances could come in and provide that service. So I'm not investing, for instance, in social networks in the Middle East because most Middle Easterners, as you just confirmed, are already well integrated into the likes of Snap, TikTok, Facebook, Instagram, etc. But we are interested in things that require deep localization and on-the-ground kind of presence, the likes of supply chain, logistics, some of the kind of unique regional or localized fintech products, other kind of more rudimentary SaaS or software that helps offline businesses go online or become more efficient. Those types of things that could not be imported from
Right.
abroad.
So post, like, let's say Arab Spring, I think it's intuitively would become more attractive to officials and executives and decision makers in government to make this, to basically have more protectionist policies when it comes to industry. Why do you think that has not been done? Is it just because they found it quite difficult to do, or do you think because they thought it would scare off foreign investors?
I think it's hard to implement. I mean, some countries have been able to do it. So here in the UAE, for instance, you can't make voice over IP calls with your WhatsApp or your WeChat, right? And they were able to build a domestic incumbent like Bottom to provide that service. Pakistan has flirted with this. I think Syria has flirted with this. So, if you're able to really truly box out a global player and provide a local alternative, you can force people over to a locally built communications or social platform. And we see countries doing it in the name of national security, or maybe loosely in the name of protecting domestic economic interests. But generally, it's very hard given the traction of these global applications. So if you were to ban TikTok tomorrow in some countries, I assume you'd have rioting in the streets because it's so voraciously consumed by local youth and has such a deep penetration level. So I think it's a combination of having an alternative and also, having people weaning them off of something they're so addicted
Right.
to.
Do you think China had the advantage of basically being in the loop when most of its population became digital, like got to digital?
Exactly. So China's advantage was technology came to China just at the right time that enabled it to leap rungs on the evolutionary ladder of technology adoption, right? So people were able to go straight from cash to mobile payments, and they didn't go through the intermediary steps of checks and credit cards. They went straight from street markets to e-commerce because they didn't have the luxury in many cities of having kind of that big box retail or mall kind of format. And so that's the benefit that many countries in the Middle East also have, and that's why we're here. Our expectation was if we understood China and we understood the way that China had evolved and how these technologies also not only evolved in China, but how they were iterated upon in markets like Southeast Asia and India, which have somewhat similar feel and customer kind of behaviors here in the Middle East, then we would have a significant advantage over regional investors who hadn't seen that evolution through.
Right. And when it comes to leaping through rungs, we can think of the Middle East as one example of that, and we can think of places where, basically, just like China went from cash to mobile payments, these places have the potential to do the exact thing. But right before we get to that, I think one question I have in mind is that you've been able to amass quite an impressive portfolio of companies in the Middle East, lots of household names, lots of famous brands that are well known as startups who have been able to build many, many great things. And I'm really curious to know, what do you think your selling point with startups is in the Middle East? Given you're not do I say local firm? Do I say you're not a Middle Easterner? You have Middle Eastern operators, but not, let's say, household name ones, right? And so, and with experience in the traditional sense. So what would your pitch be to founders who you want to invest in the Middle East, and what has it been?
Sure. So just to clarify again, we do have people on our team and partner level folks that we're involved with, and we're partners at firms that invested in many of the most successful exits in regional history. So Waleed was at WAMDA, who invested in Kareem, which was acquired by Uber. They invested in Souq, which was acquired by Amazon. Yemet Sefidi, which was acquired by Delivery Hero. So these were essentially the three biggest exits in MENA history, save for a few of these companies or one company that's gone public in Saudi Arabia. So we definitely have a very deep regional investor base that know the region as well as any other VC firm out there. But on top of that, what you get with us is you get someone who understands that Asian evolution, can bring for you literally a pre-built playbook of companies' kind of best practices that show you how to, we call them solved problems. So essentially, you're going to come across this issue, here's how you're going to solve it, or here's how other people before you solved it that were operating under similar conditions. You're struggling on customer retention, here's how three different businesses in similar markets to yours, not only in Asia, but also across the world. And because we have that kind of global dashboard and global benchmarking, we're not just looking at companies in Asia to compare for the Middle East, we're also looking in South Asia, Southeast Asia, Sub-Saharan Africa, and Latin America. And so we can give you all those kind of benchmarks and then hopefully apply some of them to help you solve your problems. The other thing we do is actually sometimes we, one of the issues in this region has been scaling companies from a technology perspective. Engineering talent here is more scarce than other parts of the world, and it's expensive. So we can help find you pre-built technologies from Asia to apply and plug into your existing platform that can also increase and the pace and also predictability of your scaling. So those are some of the things that we do beyond what a traditional VC
Right.
region.
Let's talk leap runs. So what do you think are the most remarkable ones, whether they have happened already, are happening, or are going to happen in the Middle East?
Well, I mean, when COVID broke out, we literally were the first one that while other VCs were maybe helping people on more kind of day-to-day issues, like how do you manage a team remotely and whatever, we called all of our founders together and said, your life is about to change. And largely it's about to change for the better. Because we had the experience of going through a very similar set of circumstances as COVID in China during SARS in the early 2000s, in 2003, 2004, and it totally reshaped our market in how we in how consumers engage with technology and how companies built their products for technology or for their consumers, and then we walked them through step by step all the changes that occurred in China as a result of SARS, all the consumer behavioral changes, how technology shifted. And then we literally got Chinese founders on the phone with these entrepreneurs to walk them through their experience during SARS. And, and lo and behold, essentially what we predicted to happen did happen, which was skyrocketing e-commerce penetration levels as a result of this, mobile payment increasing significantly, last mile delivery capabilities increasing exponentially. So everything we anticipated and predicted has
right. But what are places where basically a level of technology was skipped? So you mentioned cash to mobile payments, things like that, basically.
So e-commerce as well, right? Wet market to direct delivery. People maybe not having experience of going to big box retail or the malls that I grew up hanging out in America in the suburbs in the 1990s, and instead buying everything directly online. And today, everywhere we go, Shein is everywhere. And these cross-border mass market e-commerce companies who were really initially targeting what would be kind of a lower economic tier are now being bought by folks at the highest levels of economic prosperity because it's so inexpensive, it's so efficient, it's so fast, and it's fun.
And now you invest in multiple countries in the Middle East. I want to know what you think, very briefly, the differences are for an outsider, let's say, between Saudi, between the Emirates, between Oman, the GCC as a whole, let's say, and then Iraq.
Yeah, sure. I mean, so when we kind of the way we kind of drop the lines of the Middle East for us is essentially from Pakistan to Egypt. We're not as active in the rest of North Africa, so that's kind of our box.
Right. Let's have those as well. Yeah.
What we see, Yeah, and what we see in those markets generally, with some exceptions, is similar kind of consumer behavior, a similar evolutionary state of technology adoption. So when we got here, for instance, e-commerce penetration levels were low single digits, mobile payment levels were low single digits, regardless of whether you were in Pakistan or Saudi Arabia. So we saw an overall kind of similar operating environment that wasn't too different than what I had experienced in Southeast Asia and other markets. If we're to handicap or kind of define the different groupings here, though, I would say they're, kind of Pakistan, Egypt, Jordan to a degree, and of course Iraq are kind of in that more bleeding edge frontier market. And then you've got kind of the GCC, which is quite different, particularly obviously the UAE and Saudi Arabia. And the difference there really is that those markets are, the GCC markets, particularly again UAE and Saudi, have a larger kind of domestic GDP, higher spend per capita, larger basket sizes, a more mature infrastructure, obviously political and kind of overall physical stability, which makes things to a degree easier. Dollar pegs on their currencies, which is critical. We've obviously seen huge devaluation in some of these other frontier market currencies, which has hurt our portfolio companies significantly. It's something that's very challenging for us to hedge. So those are kind of the two baskets of companies and countries. But what we find, in markets like Iraq is very hungry, really smart and resourceful entrepreneurs. And Iraq is a very different market than say even Egypt. It's kind of its own world. There's less kind of cross-border proliferation between the rest of the Middle East and it in terms of companies that are operating in both markets. I mean, you have Kareem in both markets. You have, some of the food delivery guys doing a bit in both markets. But it's still, we've seen a lot more kind of Iraq-only or Iraq-dedicated companies raising capital rather than ones that are kind of regional guys that are entering Iraq. And you have a very large population and a very affluent population and a well-educated population. So a very different set of
Right.
people.
So affluent population, well-educated population, and also some cross-border proliferation. Is that it? Do you think these are the main differences you notice with Iraq?
Well, as I say, it's unique. It's isolated. It struggles. I mean, obviously, the challenge that we have today is there is physical instability. It creates challenges for our portfolio companies, for other investors to follow us. And so we have to look for a pretty specific group of people that would actually follow us into rounds in Iraq, those that have economic interest in Iraq, have existing businesses there or other financial exposure. So we've really got to build a community of aligned, not only funds, but more kind of corporates and DFIs and other investors that are financially and really truly emotionally committed to
the country, right? And I think this connects very well to the fact or the sentiment in general of Iraq, not just being not the most stable, but also not the most trustworthy, let's say, in terms of founders, in terms of local businesses. And I think this is where it's highlighted the importance of, as you said, either companies, conglomerates, or groups of people that are deeply committed to the country, economically, emotionally, even socially. So I think that's really important. And did you not find that? So before investing in Belly, my question is, so you participated in the $10.5 million US dollars seed round of Belly, and this was a big moment for the country, considering it was practically the biggest tech investment in it. What did you think of Iraq before that, and what did you look into when thinking of investing in Iraq?
So again, we didn't discover Iraq through the Belly investment. We had already been looking at Iraq for a year or two prior to that. I would say probably our first meetings with Iraqi startups happened in 2019. And as I mentioned, one of our partners went on a trip there organized by some of the DFIs, and I think they even visited the where you guys are currently doing your interviews, the station. And so it was a market we were already talking about, and we were talking with other kind of aligned ecosystem players as well to kind of better understand what the conditions were like on the ground there from an investment perspective. We talked to some of the big families, we talked to the different business associations, the American Business Association, the British Business Association. We spoke with other VCs that were active in the market. We talked with the large banks, telco players, and we started to exploring even partnerships with other, again, regional corporates that had exposure to the market to see if there were ways that we could maybe join forces and combine both our know-how and capital to make investments in the market. The first investment that just came out was Bally. We actually looked at doing mini deals before that and looked at most of
What were the obstacles?
larger technology players to raise capital. I mean, if you just look at the names of companies like Mitswag or
Sandu, Talabat, Talabati,
Sundu,
yeah.
some of these names, all the existing names that have raised money, we looked at them either, kind of quickly or in more depth and actually had
Right.
calls with
So
them.
what was the barrier?
I think it was just, again, we have a very high bar. And when we invest in we don't have to invest in Iraq. No one has given us capital to invest in Iraq. As you know, some regional investors or DFIs give capital specifically to an entrepreneur and to VCs to invest in a certain market. No one told me to invest in Iraq. We did this entirely on its own commercial merits. And so if I'm investing in a company in Iraq, it has to stand up from a quality perspective to a deal that I could do in Saudi Arabia or even India or Pakistan or
And when you say quality,
Brazil.
do you mean like bookkeeping? Do you mean being linked to a conglomerate, someone, as you said, deeply committed?
All of the above. So quality of the entrepreneur, size of the addressable market, quality of the product, path, to growth, path to some form of liquidity, all of the above, all the usual metrics that any VC would look at when evaluating a company. And also, obviously, is it a model that we understand deeply and can add value to? And so it would have to stand up on those merits, and the companies that we'd evaluated prior to coming to Bally didn't meet that bar.
But you think it's feasible for an independent operator to come up to you guys and talk, or do you think the right approach and the safer approach, very understandably so, is to work with people that are, let's say, more connected to the country?
You mean in terms of coming to us, or how we work in the market?
Yeah. Like, I mean, would you be open to independent operators, to investing in independent operators? And also, one other thing is, how easy or difficult do you think it is for independent operators to be connected to people who are deeply connected to the country without maybe giving a lot of their stakes, their equity? You probably had this conversation, I think. So what is your take?
So, I mean, we're very comfortable investing on our own. I mean, when we invested in Bally, I think we're the largest or second largest outside shareholder. We co-led that round. So we're not sitting here, and the firm with whom we co-led the round was also not a domestic VC fund in Iraq. So we're very comfortable operating independently and don't need to follow any kind of local corporate or conglomerate or investors into these transactions. In terms of the company itself, obviously we're looking for as much as possible independent, commercially driven, traditional VC backable companies that have a very clean and transparent cap table, and none of our companies around the region that I know of have any kind of significant exposure or share with any kind of a local entity, unless it's one that is very commercially strategic to them, right? One that provides licenses or logistics partnerships or banking partnerships or something like that.
I mean, Iraq is different. Like, we can both agree on that. Like, yes, you might not be doing it for directly strategic or commercial reasons, but it reflects a better image. So I don't think it's like really.
Yeah, no, sure. So what we've done in our case is we've brought in well-connected individuals in Iraq as investors. So they've commercially invested in the company on its own merits. They weren't given free shares. We've brought in some of the larger conglomerates or telco providers and others as investors as well. So no, we want aligned individuals on the cap table that can add value, that can help steer the company through challenging times. Of course, we
So
want all the
when you
money.
invested in Belly, did you look at the company first or the industry? Because ride-hailing and a new ride-hailing app in Iraq may not have been the easiest pitch at the time. You know, there wasn't incumbents, you mentioned it, and they were taking up market share as well as local players. So why ride-hailing?
So we looked at the industry first and the opportunity. At the time we invested, Bally didn't really exist. It was an idea on paper, and that's so we have to have that kind of conviction to invest in a team and an idea before we see the fruits of our labors or the kind of concrete outcomes in many instances. What we liked about Bally's kind of founding team was that they had a playbook and an understanding of how to roll this model out from a successful case study in another neighboring market. And they married that understanding with our own expertise in building a local e-services super app. And if you look throughout Asia, historically, in the early innings of a country's technology development, the first winner and the one that creates the most value is a company that is an e-services super app. Usually that starts through ride hailing or food delivery or some kind of a high frequency, relatively low margin use case, and then expands into those lower frequency, higher margin use cases. And so that's obviously the model that was used by the likes of Meituan, one of our portfolio companies in China, which at its peak achieved a $340 billion valuation. It's the one that was used by the likes of Grab and Gojek in Southeast Asia to achieve multi-billion-dollar exits. And so we believe that it was the right model
just
to enter
very
Iraq.
briefly, why high frequency? What's the importance of that when establishing a super app?
Basically, you got to onboard people, and you can bring a beautiful fintech, kind of application to people. You could bring a beautiful, new app that has a certain kind of, high margin use case, but you got to get people inside of it. You got to have a customer acquisition channel, and the easiest customer acquisition channels in emerging markets.
Right.
This.
Can we say the cheapest?
Yeah, obviously it costs the investors money because you've got to, often subsidize. These are usually loss-making kind of models. And again, this is true across all these markets. When we invested in Meituan, people thought it was crazy. They thought it would lose money forever and it would never be able to scale and certainly not become profitable. And lo and behold, once you had literally billions of users inside of this application ordering food that was a very low margin application or use case, you could then say, hey, how about buying this ticket
right,
to
but it
a
being
music
tangible
festival?
is
and how about
it being tangible is a selling point, like for users, and makes like acquisition cheaper, you can say.
It's just a everyday use case. I mean, not everyone is ordering a concert ticket every day or getting a new, bank loan, but everyone's eating food and traveling in some form or way or shape. At least
So you mentioned two
times.
things: the playbook and the super app. The idea of a super app. Let's start with the playbook. Today, you see independent operators in Iraq. They're running independently. Their founder is the major stake shareholder, and this kind of gets us to the discussion of, let's say, the missionaries versus mercenaries, right? Where one side has innovative ideas, very tailored to this market, and kind of is trying to build this from scratch, versus someone who, let's say, maybe is backed by a conglomerate or is a subsidiary of a conglomerate, has a playbook, let's say, from neighboring markets, and looks at this and just, okay, let's implement this, maybe with a couple of changes here and there for Iraq, for this market specifically. Where do you think most successes in the digital space of Iraq will come? Because now we're seeing lots of conglomerate-backed companies that are growing very fast because they already have the capital, connections, etc., and dominating a lot of the markets they're in. So where do you see this going?
So, of course, we always like to see our portfolio companies have some kind of a commercial partnership or traction that helps them accelerate their growth out the gate. And Bally has that as well, and has strategic partners across different verticals, again, be it telcos, banks, conglomerates. But, one thing that you always have to be careful of, and it's something that we, avoid when we're making independent investments, is if a company has too much ownership from an existing corporate, or it's kind of like a CVC type business, a corporate venture capital backed business that is maybe a spin out of an existing business, or still, again, has very limited founder equity. Usually those businesses do very poorly. Because at the end of the day, you can throw as much money as you want at something, but you're kind of getting B or C rate founders that
Sure,
are
but you
running
don't
the
need the
day-to-day
smartest
business.
founders.
And it's really only
You
those.
don't need the smartest founders.
You'd be surprised, though. I mean, a lot of corporate venture capital has failed, even when you had a kind of monopoly on certain sectors. And again, it depends on the scale of the monopoly, just because that business isn't being driven by a hungry, super motivated entrepreneur because they have significant equity in the business. If it's some really kind of monopolistic market or structure where there's just no way for a new entrant to break in, perhaps
Right, but that's not
that
quite the
business
case in
can
Iraq.
succeed.
Yeah.
That's kind of
What examples would you point to when it comes to that? Of like conglomerate, yeah,
the CVC?
yeah, basically failing.
I mean, I across the Middle East today, you've got companies that were trying to spin out of, the national oil companies, that tried to spin out of national level banks, e-wallets, neobanks, that just failed on account of just having the wrong profile entrepreneur leading them because they couldn't get more than a low single digit amount of equity in the
Right.
business out the gate.
If we get to GPT-5, will that be fixed? Will we get to like a smart founder who can do the job, which is GPT-5 basically?
It's especially in the Middle East, there's just so much. It's such a hands-on game, and there's just so much day-to-day work to be done in the trenches, that I think we as a region are less vulnerable to the likes of ChatGPT because of that. If there were, I think that the bigger guys that are at risk are the SaaS players and the people who are already
and who are basically like foreign entrants can already come in and dominate that. Right.
That's right. Which is again why we
let's talk super apps. So, you've invested in Belly, which aims eventually to be the Iraqi super app. Maybe we've seen kind of a super app model being implemented, let's say in the GCC with Kareem. We've seen with Gojek, with Gab, with WeChat and Alibaba and Alipay in China. But do you think there are only certain environments and certain conditions where super apps can work? Let's say in domestic favoritism markets, let's say in regulated markets, let's say in markets where competition is existent, but let's say there is government intervention within. Is that a theory to be made, or is it kumbaya? What a controversial question.
Sorry, I was turning on the lights. Super apps, I think super apps struggle in more mature markets. So in mature markets, customers already have a certain expectation for quality of service, and super apps don't meet that standard. Super apps kind of do good enough across a wide array of services, but it's not at the highest tier. And so in America, you essentially don't have any super apps today, right? Everything is siloed. You've got your Yelp, you've got OpenTable, you've got DoorDash, you've got Uber, you've got your Chimes or financial services products, and none of these are kind of integrated. Maybe food delivery and ride hailing are kind of integrated, but nothing beyond that, right? Uber never evolved into the super app that maybe Travis pitched to everyone.
Under what conditions would it
years
have?
ago? And again,
under what conditions would it have?
I think it's challenging. The other reason why it's challenging is in the West, not only is consumer behavior expecting a kind of a certain quality of product, regulators aren't going to allow a single application to get so many different licenses. I mean, the joke I always tell people is that something like Alibaba and particularly Ant Financial
walking antitrust
exist
case
in the West, because it'd just be littered with antitrust cases. I mean, it's Standard Oil times a million. It's as if Standard Oil controlled your, your fuel, your food, your banking, your transportation, right? If you can imagine that, right? Your communication, your entertainment. So obviously, antitrust isn't as big a concern for emerging market regulators as it is in the West. Overall, I think it has to be kind of in a more emerging market environment where you have that combination of consumers that don't have high expectations on quality of an individual application, like that ease where, I don't want to go through the stress of setting up 10 different, payment accounts. If I just have one payment account that's married to my Bally app, if I can do every service I need within that app, food delivery, grocery delivery, book my salon, book my travel, that would make my life infinitely better because I don't want to go through this. So, I think that in that way, super apps succeed and thrive in emerging markets in a way that they wouldn't in mature markets.
Right, and you envision that happening in Iraq?
I think we have a really good shot at it. So again, I mean, you mentioned Careem. Careem is not a super app. It has failed to become a super app the way that Grab and Gojek have. They've just now raised a new funding round with the stated intent of executing upon that. My personal view is if they were able to achieve that, they would have done so several years ago. I mean, they had a head start essentially on Grab and Gojek and weren't able to do anything near the scale of what they have done over the same period. And there's different reasons for that we can get into. But what that's done is that's left the door open for many other regional players to build their own super apps. So some of these kind of neobanks, mobile e-wallets in Saudi Arabia are making headway in becoming their kind of local consumer-facing super apps. And there's one in Egypt that's doing well, that's kind of combined banking with ride hailing called Halan. And then I think we have the potential to achieve that with Bally because it's already beating the likes of Careem at their bread and butter business, which is ride hailing in the core cities. But on top of that, we have an incredible product stack that again came out of our existing kind of team that has built this in other markets. So we really have kind of the playbook to execute.
Right. Also, briefly, so China makes up a good chunk of Iraq's exports. It's around 30 to 40%. We have trade with China. We use lots of Chinese products, like from electronics to automotive to even software, like TikTok and PUBG. Why hasn't there been an entrant from China to this market so far, like compared to entrants from the US, like you can say Uber, Germany, like Delivery Hero and others?
To the Middle East?
To Iraq and maybe to the Middle East in general.
Because the Middle East is inundated with Chinese products. Just, again, you see them, and a lot of them would be very happy if you didn't know they were Chinese. So they've done a very good job of kind of masking themselves, of rebranding themselves. But for instance, again, in the cross-border e-commerce space, this is dominated by Chinese players, be it TikTok, Temu. Just to give you a simple example, in the mom and baby space here in the GCC at least, or in the UAE, it's dominated by Chinese players like Hi Bobby, Pat, etc. Again, you might not know they were Chinese, but they are. Supply chain is in China, founders are sitting in China, technology was built in China. There are live streaming applications all around the Middle East. I don't know if you've heard of Yalla, for instance, which is a leading audio-based audio streaming. That's Chinese. So the Chinese are here. And that flow of Chinese companies built in China specifically for the Middle East is going to accelerate. The Chinese neglected the Middle East for several years because they thought it was too small a market. They focused on kind of bigger homogenous markets like India, Southeast Asia, which is culturally kind of closer to China. You have kind of ethnic Chinese populations pocketed throughout Indonesia and Malaysia. So it's easier for them. The Middle East is quite different for them from a communications, cultural, operational framework. But I think more and more you will. Iraq is not yet on the radar of most Chinese, although it already is. So have you ever heard of a company called
Yeah, is that Chinese? Really? Wait, so it's not like Chinese. A franchise. It's proper owned by China? Really?
That's a Chinese company that has maybe given a franchise to a local Iraqi partner, but I think they have 19 stores in Iraq today. You think they're probably Japanese because the logo looks like Japanese Muji or something?
That's Chinese,
That's a Chinese company. And as far as I know, that's the only franchise really operating in Iraq. The American companies aren't there. So you could actually make the argument that the Chinese are more in Iraq than the Americans.
Do you envision a ride-hailing, a food delivery, I don't know what thing made by the Chinese in Iraq?
I think that they, I think for them, Iraq might be too small a market with too many perceived risks for them to come in. But again, they're going to come, if it's something that can scale through bits rather than atoms, right? So something like TikTok or, some other forms of communication and entertainment, that might be an easier way for them to enter Iraq. I'm sure that they're already in Iraq through hardware, right? Through through Huawei phones and Honor phones and Transsion phones and Xiaomi phones. And I'm sure they're in Iraq now through all the kind of cross-border e-commerce products as well. So just because they're not in the ride-hailing space doesn't mean they're not.
What industries are you looking at in Iraq specifically? What industries would you like to hear pitches from founders on?
Financial services is probably our next big target. I mean, it's something that we could also integrate within Bally, and certainly it's part of the potential product stack is to have the ability to do payments and loans and other kind of financial services components. But I think that Iraq has a really significant opportunity in the financial services space, and we've not seen really significant.
Do you think it's something that resembles what's happening in Africa?
Yeah, I mean, we have investments in all over Africa. We're deeply invested in Egypt, obviously, in Nigeria, in Ghana. I have exposure in Kenya and in South Africa, in the payment space, as well as in the kind of embedded supply chain financing space, in the SME financing space. So
people have been trying to do that for a while, supply chain and SME financing, but I don't know, it's constantly failing for some reason.
Yeah. Yeah, we've looked at a few in Iraq. I think maybe we would gravitate more towards the consumer payment side of things, consumer loans.
About leapfrogs, why is now there being increasingly bigger focus on credit card adoption in Iraq instead of mobile payments? You're seeing both the government, the central bank, and traders trying to accommodate more credit card payments, even though the sensible thing to me personally is like, okay, cash to mobile payments, you can skip the credit card step. Why is that, do you think?
You never know. I mean, I think maybe in some instances mobile payments sometimes lend themselves to new entrants, to startups, and maybe by keeping people captive to credit cards, it helps the entrenched banks, many of whom, as you know, in Iraq are government owned or have government affiliation, for retaining their customers. Credit cards also make a lot of money, and so there's probably a lot of incentives being provided to retailers to accept credit cards, giving them free physical POS devices, other kinds of incentives. So, certainly incumbent players are very incentivized to ensure that the credit card system doesn't go away.
Do you envision a coup d'etat, a flipping of the tables? Okay.
You never know. Mobile payments have taken off in China because of the entrance of WeChat and some of these other providers who were able to, and Alibaba, who were able to integrate payments into chat, right? So I don't know if you know the history, but WeChat really took off as a mobile payment or as a peer-to-peer kind of payment platform through the existence of these things called red envelopes. So on Chinese New Year every year, the Chinese give each other these red envelopes as a gift, and they were able to digitize it. And inside the red envelope is cash, obviously, so it's kind of like a cash gift. They were able to digitize that and make it very easy for one person to give mobile cash to everyone, and that kind of was the way that you seeded the wallet. The biggest challenge that emerging markets have is how do you seed that wallet, especially for people that are underbanked or unbanked, right? And so the way they do it in, say, Southeast Asia is I get into a Grab or a Gojek, I sit on the back of a motorcycle, and at the end of my ride, I pay the guy 1,000 rupiah or 10,000 rupiah for the ride, and then rather than him giving me cash, he funds my wallet with the change. Right, so you've got to find, and you have this in Africa with what we call mobile money agents, where literally there are physical people walking the streets of Lagos, taking your money and putting it physically into the account.
Last night to my friend. I was like, why isn't there like a car or a person? Because mobile payments is useful to be honest.
It's messy. It's messy. It's not easy. And again, that's why we've got to. That's why we've got to use the ride hailing. If you just started with a mobile payment app, you're going to get so little adoption. But if you provide them with those critical need cases first, then you can migrate them into mobile payments.
So there are not very pretty things happening in China. There are risks about deflation. There are things about the real estate market. There are also things about youth being unemployed, okay, and a large chunk of the youth being unemployed. I personally see a lot of parallels popping up between Iraq and China, especially with the real estate. I don't want to say bubble, but the boom, okay, with the staggering amount of youth unemployment because of them not wanting to do, let's say, lowly jobs. How do you think? Do you think these issues on the long term with China will be resolved? And with Iraq, have you looked into these issues? What is your take on them? How do we resolve this? Right.
So I can answer easier on China. It's tough for me to be prescriptive of the issues in Iraq. And they're obviously very different countries from a governance perspective, from an economic perspective, in terms of their industrial base, their recent economic history. So it's tough to draw parallels.
We try to.
And Iraq, obviously, I think, you've had some political instability over the last few years. I think that needs to be bedded down. And then, they're going to have to really focus on the economy and improving. I know there's high unemployment, especially amongst youth. We know there are challenges there to be had. And that's why, again, we've always invested in what we think are critical use case, must have kind of products and services rather than, pie in the sky aspirational products that should come from a very mature expectational market. In China, the challenges are largely of their own making. I mean, many of these are kind of own errors. China is a market for centuries essentially has encouraged people to invest in real estate, and with the expectation that the prices would always go higher. And they've obviously reached a saturation level now today where there are probably more properties than there are demand to buy.
Deja vu much?
And so that's going to force down.
Deja vu much?
Huh?
I mean.
Yeah. So the challenge is really going to be how can they wean themselves off of dependence on real estate as a form of wealth creation and value storage. And that has a lot of implications then for the economy, because a lot of regional governments were using that real estate boom to generate employment and to show strong economic numbers, when really all they were doing was racking up a bunch of bad debt to build airports and roads and apartments that nobody wanted or needed. So there's obviously going to be a lot of pain, I think, to get out of that, but I think it's a necessary catharsis. Youth unemployment and some of the kind of things that are tied more to the economic situation in China are, again, a lot of function of how bad state the economy is in post-zero COVID. And some of that has to do with the Chinese, again, infrastructure and investment, kind of public investment-led growth model. And a lot to do with just the overall kind of, challenging state of the economy with regard to global investor appetite for the market, their perception of how stable is as a place to invest. And so the Chinese government's going to have to take significant, I think, invasive action to stimulate the market, even though they don't want to, by lowering interest rates, pumping capital in, and getting themselves out of this kind of deflationary cycle.
I know we exceeded your limit, and I'm very sorry, and I'm very appreciative of your time with us today. I'll end with two questions. Okay, nice.
Saudi versus UAE.
Yeah. Saudi versus UAE. I think we're seeing this trend, and correct me if I'm wrong, of basically deglobalization, okay? And with economies being more isolated and insulated from the rest of the world. And with the advantage being given to basically larger economies that I wouldn't say can be self-sustaining, but are more self-sustaining and more able to self-sustain than others. And there is this waning influence of the global economic hubs, let's say the NYCs, the Londons, the Singapores of the world. How do you see that being reflected today at what I think most of us, even Iraqis, thought was unthinkable, the competition between the UAE and Saudi in terms of, is the hub for economic and technological innovation going to be in Riyadh or in Dubai?
Yeah, it's, I think of it as more of a friendly competition, and I think it's one ultimately that will be kind of parceled up where each market will have its own strategic advantages and kind of sectors that specifically kind of lend themselves to the talent base, the regulatory environment, and kind of the history that exists in those markets. So, for instance, today we're not seeing huge advancements being taken in Saudi Arabia in, say, the biotechnology space, where the UAE already has a significant amount of infrastructure and really has the ability to start to kind of lead on innovation from a regional standard. Whereas I think Saudi has the market and has the demand potential and the kind of overall momentum to be maybe a more of a entertainment hub and to be a hub in the financial technology space or some of the other verticals where it can benefit from a local funding base and size of population. And as you said, in the deglobalization is finding its way into the public markets. No MOOP specifically, I think, is an interesting evolution in Saudi Arabia, where now you have a kind of a secondary board, which is more tech oriented. In the UAE, the ADX is likewise trying to become more of a more, kind of make a transition from being just a board that's used by companies that have dividends to generate and more of a growth-oriented NASDAQ type exchange, and we're actually working as a firm on some of the initiatives around helping both achieve that.
On one side,
so I think it's not a bad evolution.
Right, but on one side you see scale, right, of Saudi as a market and its ability to run, let's say, and rely on its own capital, etc. But you also see there being less controversy in the UAE, it being a more quiet economy, and I think that also has its merit. So yeah, maybe it's not a clear, obvious path for who will win going forward. And as you said, it might very well be a friendly competition. But also, back to Thucydides, do you think it will get to a proper competition?
I mean, in this case, you don't have the same dynamic of a mature existing player and a rising player. We have two players that are both rising to some degree simultaneously. And in some ways, even the UAE had a bit of a head start over Saudi Arabia in kind of this technology and innovation realm. And now Saudi is playing catch up and putting a huge amount of capital and support behind it. And I think that you'll see kind of a division where people will kind of decide where they want to live, and Dubai certainly attracts a certain type of crowd, and Saudi Arabia another, but more and more you'll see a confluence of them, and I think it's to the benefit of everyone across the GCC that we start thinking about pan GCC businesses rather than just simply one geography versus the other.
One last question, and if we can actually not briefly talk about this, but more sectors you're interested in Iraq, more sectors you're interested in hearing about in Iraq, ideas maybe.
So again, I think anything that has a strong local operational moat is of interest to us, and of course one that's addressing a large must-have market, right? So again, we're not looking at investing in this kind of cutting-edge SaaS or AI space in Iraq. We're interested in investing in things that solve the operational inefficiencies of daily life, be that in the commerce space, be that in the logistics space, be that in the financial services space. We're not particularly active in the healthcare space.
Why so?
In the agri-tech space, maybe some of the others. We just try not to boil the ocean. Our intention is to really focus on just a couple sectors and be very deep in them and feel like we know more than anyone else in those verticals. It also, though, does evolve a little bit out of our experience globally. So, for instance, EdTech is a space where we don't invest much. We've seen very few EdTech success stories around the world. There's a lot of exuberance. There's a lot of money that was invested in EdTech in the Middle East over the last few years. But if you look at the Baijus of the world, you look at China, and even you look at the United States, not a huge amount of successful outcomes in that sector. So we take that into account when we look at these sectors as well. But again, we don't want to boil the ocean, so we've got to stick to what we know best, which is really what we think in Iraq are those key infrastructure layers, which are kind of the e-tail enablers and the financial services enablers.
One bonus question. So you're a co-owner of Qadis, or as we call it, Qadish FC in Iraq. Lots of fans here as well. Do you call it football now or soccer?
Always football. I grew up in Europe, so I'm
Great.
Always football. And surprisingly, I was looking at our numbers the other day. I think our second or third highest following in Qadish in the world is in Iraq.
Right.
Don't ask me why. I spent a lot of time and energy, so I've built a Arabic language social media team based here in the UAE. And then we really try hard to build localized content for each market around the region, tapping into local memes, social trends, as well as, of course, national level performance of national teams or national days, whatever it is. And then I've built partnerships with what I believe to be are the best football clubs in each market. So, for instance, long before Cristiano Ronaldo showed up in Saudi Arabia and all this big noise came around Saudi football, we had done a partnership with Al Nasser. We have a partnership that hasn't yet been announced with one of the best clubs here in the UAE, what I believe is the best club in Qatar, and then we are partners with Al Ahly in Egypt, which is arguably the biggest club in all of Africa. So would love to do something in Iraq. I actually loved the Iraqi national team jersey, that kind of gold and black one that you guys have. Someone was supposed to send me one of those. I haven't gotten it, but suffice to say, we're trying very hard to endear ourselves to Arab and particularly Iraqi fans.
Right, that's amazing.
Fans as well.
This is the most sad I've been because I'm not like a big football fan, to be honest. Like, this would be so much fun if I knew more about Qadish other than like it's a big team, But that's amazing, and I hope you do something soon in Iraq. You may have seen the Gulf Cup that happened. It was amazing, and I think there can be much more amazing things in the funnel. Who would you recommend for us to interview next outside of Iraq?
Outside of Iraq. You might interview someone from China. I think it's interesting to speak with Chinese founders today and kind of understand what they're going through, especially some of these cross-border founders that are operating here in the Middle East or building for these markets. I think it's an interesting perspective, and how do you kind of meld China experience with the Middle East. So that might be something interesting from my. We can give you a few names, but people that are building cross-border e-commerce, cross-border live streaming. I sit on the board of directors of a company called Asian Innovations Group, which is kind of taken Chinese live streaming and applies it here, and we have offices throughout the Middle East as well.
Right then.
Happy to introduce you to
Ben. This has been an absolutely enriching, educating, and very insightful conversation. I'm really glad to have had you on. As I said, absolute privilege and really, really fun convo we had. It's always valuable to hear about what other countries and markets have been through. And I think we can rarely find someone who has had as much experience in that as you. Thank you so much again for joining us. And hope people got a thing or two and learned something out of this. And hopefully we can see you in Baghdad.
Thanks for having me.
Perfect.
I'd love to come.
Right,
you'll be
thank you very much.